Hello and welcome to another weekly update and review. Today is Sunday, May the 19th, and we're going to take a look at our positions and our performance over the last week. To start off, let's check right here. This is the week ending Friday. We're up 0.1 for the week. Market is up 1.66. We had a bunch of positions auto close a couple of days ago when the market ripped up higher, and that left us a little bit under allocated. We had an option of putting an early trade on Thursday or Friday, but I opted not to do it because of the very low VIX. I figured I'll just wait for the scheduled trade on Monday and then put it on, regardless of the VIX. But yeah, we had an opportunity to put on a trade, and if VIX was a little bit higher, I would have put one on. And but that's just part of the plan. Now, as you can see right here on the right-hand side, year to date, we are in the blue. And I get that a lot of people are asking, well, why would you even do this if you're just kind of going along with the market and not significantly beating it? And my answer is that first of all, you have to zoom out when you talk about performance and returns. You can't just look at any short time frame. And also keep in mind that my goal is not to beat the market on any particular time frame, like a week, month, or even a year. My goal is to return around 18% CAGR over time on the account. And if I do that, then market will, as it always does, bring in around 10% long term, and I will beat it by definition over the long period of time. But for any short time frame, that's it's a moot point. And if you zoom out a little bit, you can see here that in the times of when the market is going a little bit sideways, like you can see the red here, going up and down, but basically ending up at where it started over a year and a change, from May to October of next year, basically breaking even. We were steadily going up, and that's what it's all about. We will probably try to keep up with the market, just barely, matching it when it's ripping higher, but then continue to perform decently even when the market is doing nothing or maybe going a little bit down or something. And over time, that should bring us where we want to be, because the market right now is bringing in, if you take a look here, SPY year to date, right, 11.4%. And if you take that, what is today, May, so almost almost 5 months, so 4.5 months roughly. But if you take that 11.5%, and let's do this, let's do that. So we go 11.4 divided by, let's just do 4.5 equals, and then times 12. That's a 30% return at the moment, if you annualize it. And there's no need to really beat that significantly to stay on track for us, for our plan. Now, I may choose to go a little bit higher. I'm targeting 18% CAGR. I could choose to do 20, which I probably will. But anyways, it's important to keep in mind, this is my goal. It's not my goal to beat the market on any particular time frame, but I do want to get this return over time, looking back. So maybe 2 years from now, if we look back for 3 or 4 years, and we want to calculate our CAGR, we want to see that it's somewhere near here, and that's what we're trying to do. So anyhow, just wanted to point that out. I think it's important to keep the bigger picture in mind when we're looking at these things, and especially when the market is ripping higher and you feel like, oh, you should be just staying in the market. Let's take a look at our positions real quick here. It's right there. So a bunch of these positions auto closed. So we only have these here that are blank: 1, 2, 3, 4, 5, 6, 7. So only a few trades on. Our buying power usage is very low. It was around 5-6%. So we're in a great position to put on another trade on Monday, and then we'll see what happens next. Maybe we put 3 trades next week. We'll see. We'll try. But yeah, there's not much else going on. Total PDS open value, it's around 10,000. And then if you take a look at the book loss at the moment is very low, so it would probably almost be covered by closing 50% of these. So we definitely have room for taking on more risk, and we'll do that on Monday. So I'll see you then. Until then, have a fantastic rest of the weekend, and see you soon. Thanks.